Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm here every Tuesday and Thursday from 1:30 to 2, and I'm so happy I'm here and that you're joining me today. Wow, really slow day, but what an amazing day for patterns in gold, in the S&P. And remember I told you, in order to trade the markets properly, you need to look at the underlying ETFs, and exactly what happened. We had the big buy reversals here on the spiders and on the Qs here on the spiders on the 30 and the 60-minute time frame. Little tidbit here that I teach people all the time. When you have my MACDs right here, this is the pivot line that you can barely see. It's a solid white line right here. When the MACDs cross positive above the pivot, you can see you made the new high. The 60-minute MACDs did non-confirm. I called this monster short today. Really great pattern on that. And I just want you to know, right, that when you're trading the markets, it's important to understand these 5 conditions: a trend, a buy reversal, sell reversal, a correlation, and a disconnect, and how each of them has a strategy for both the buy and the sell strategy for both, a buy and a sell divergence for both. What we really want to look at here now, okay, is when you see this pattern right here, like this right here, okay, and you see the buy reversal with the MACDs above the pivot. The S&Ps were trading, I think, the 27 level, and I just said I'd short them. I'd short them with my eyes closed, and blink, boom, they traded all the way down to 55.80, 58.87. Now, with that being said, such a slow day. Most of the activity occurred this morning, right? Most of the day occurred here. Okay, but what you want to understand and what you want to see here is you see when the time frames reversed here. Okay, what do you look to do? You look to buy the next pullback on the 15-minute time frame right here at exactly, I believe it was around 11 o'clock. The S&Ps were trading 58.87, 87.5. I said this is the first pullback on the 15-minute time frame after the 30 and 60 correlated. Right now, you're swimming with the tide. I'd buy them, right? And boom, look what happened. Unbelievable opportunity for us to be in the market, to be taking on longs. It was a monster pattern. Like, I don't say monster like that for a reason if I didn't mean it, okay? It's important to realize and understand that when you're trading the markets, you want to be able to be in this situation to give you the best ability to recognize these patterns. So when you see things like this, you say to yourself, wow, Steve's calling, right, telling us that the 30 and 60-minute time frames reversed to buy. And what happened? Boom. Let's see what happens. And exactly what happened was we got the great pullback. And we waited patiently for the bigger time frame, and that was it. It was over. Okay, it was absolutely over. What we want to do and what we want to be able to see is having the ability to recognize these patterns, right? To recognize using multiple time frames. And when you use multiple time frames, it is important to truly understand how you recognize these trends and these buy reversals. And again, whether you're using the time frames on using multiple time frames, the 15 to 30 and the 60-minute time frame, register with me for the ability to call my 5 conditions. If you're looking for intermediate term patterns, then you want to look at potentially, let's just say you want to look at like maybe the intermediate, maybe the 60-minute with the 240 and the 360-minute time frame. And if you want something even bigger and better than that, okay, you want to be able to look at potentially the looking at maybe like the daily and the weekly time frames. Okay, that's important. That's really, really super important there. Okay, what we really realize and what we look to understand in trading using the multiple time frames is the ability to really register with the trades and understand how these patterns can really be effective. Okay, and when you're effective in trading these markets, what you want to do, okay, what you want to do is to be able to look at the market in such a way, okay, that when you wait patiently for these pullbacks, like we saw. I mean, I'm thinking the oversold condition on the 15-minute time frame into the positive MACD. Okay, that's the 5. Look at it right here. Look at the pullback right here on the 15. This is an absolute phenomenal pattern. Absolute phenomenal pattern. Okay, and when you take these opportunities and you look at this, okay, you want to be able to recognize that when you have these trades and these trades pretty much in any way, shape, or form will give you the best opportunity to take the risk that you're seeing in the market and understand the true pattern. The true pattern, okay, is the ability to buy this pattern based upon the MACD's positive on the 30-minute, the MACD's positive on the 15-minute time frame. So these are really super important patterns to have. Okay, and when you're trading the market, you want nothing more than to be on the right side of the market to give you the ability to see the trade, understand the trade, and why it's happening. When the 30 and 60-minute time frames correlate to buy, then the next thing you do or to sell is to look for the pullback on the 15 or the short on the 15 if they reverse to sell. Okay, so again, if anybody has any questions, my number is 914-500-7484, and it is important to to ask questions, to learn, and more importantly, what people want to do and what people need to focus on is understanding how these patterns, can help them in each and every day of their lives. Okay, and that's important. That's important. Okay, that's important. When you're trading the markets, right, and you're looking at the underlying ETFs, it will help you immensely because that pattern you would not have seen on the S&P futures. You would not have seen that pattern on the S&P futures. Okay, it's important that you understand. Okay, when you get these patterns that you use the underlying ETF. So let's look at the QQQs, for example. Okay, same thing, right? Look at the QQQs here. Here's the 30-minute. Today, the 30-minute. Well, I don't know why, but the 30-minute did not reverse to buy, but the 30-minute did. But look at this beautiful positive MACD from below the pivot. Okay, and then you get the pullback right here. Look at a pullback, beautiful pullback, and you can see the Qs on that pullback at exactly around 11 o'clock, went from the 41.5, 41.60, and they ran almost $3 there. Okay, and the NASDAQ futures, then you do the correlation, ran on that pattern from 11 o'clock below the 20,370, and literally 1, 2, 3, 4, 5, 6 bars ran about 160 points higher. Okay, that is a monster pattern. Okay, so again, using multiple time frames, using the underlying ETFs when you're trading the markets is very, very important. Okay, very important. I've taught this to the tops of some of the top hedge fund managers in the world, and it is important to understand and to resonate with the trading that you're doing, to the point that when you're trading the markets, You want to be able to be in a situation that gives you the best opportunity, using multiple time frames, using the underlying ETFs for you to have the ability, okay, for you to have the ability to trade the market in such an effective way, okay? If you at any time have any questions and you want to talk to me about this, again, my number is 914-500-7484. Okay. If you want to understand how the market, you trade the market and using the futures markets, it's really just something that I guess it's important for all of you to fully understand how important it is to. I've studied this, I've done this, to use the underlying ETFs in your trading, and that is important. That is important. Okay. That is important. Okay. That is absolutely important. Okay. Let's see here. All right. Does anybody have any questions at all here? Okay. It's important. It's important that when, like I said, that when people are trading, you want to be able to be in the best situation, okay? Whether you're trading the underlying ETFs in a way that will give you an unbelievable opportunity here. Here's a nice pullback on the S&Ps on the 5-minute. Okay, let me just bring this up right now. Beautiful pattern again on the S&Ps. Let me just bring this up right here. That's the 15 and the 5. Here they are. You can see the low here. They ran up. Oh, Jesus. Boom. Okay, there they go. Okay, there they go. Beautiful, beautiful, beautiful oversold condition on the 5. Again, beautiful. Just ran about 40. S&Ps just ran about 4 handles here. Now, the 30-minute time frames today, when they got that oversold condition at 11 o'clock, the 30-minute time frame set up as well. And that was really, really characteristic of the market in a way that you'll be able to understand which way the markets are going. And that is really the cusp of what we do here. Whether you're trading the YMs, look at the Dow futures, beautiful pullback. The YMs just ran about, the Dow just ran about 30 more. And, it's important when you're trading the markets, right, that you just be consistent every single day. Just be consistent. Here's 4 handles here. There's at 12:30, the S&Ps ran 8 off that pullback. So there's opportunities here in trading the markets. But remember, also you have to remember how slow it is here, right? It's very, very, very slow. Okay. And when you have slow markets like this, you just say to yourself, well, wow, it's just really understanding, don't get involved in big positions. If you look here on the 15-minute Qs, you can see we just ran on the NASDAQ futures, we just ran about 15. Right? The Qs just ran about 35. You can see the 15-minute time frame again got another pullback here. So what we want to be able to do is we want to be able to take these patterns. I have my chart set up. The NASDAQ futures, beautiful pullback on the 15. The TQs rallied nicely. But again, what we want to be able to do is, when you have your chart set up, take the continuous contracts, the 3, the 5, the 15 on the continuous, and then bring up the 5, 15, 30 and hourly. And when they align using my software, you should be going in that direction, okay, long and or short. All right. Now, let me just look at something over here. Okay. All right. Okay. Just looking at the S&Ps here for a minute. Oh my God, you idiot. Okay. So again, what's really important from all of us, from my standpoint of view, is that when you're trading the market, use your multiple time frames. when you're trading the diamonds or the YMs, you need the diamonds. When you're trading the Russell, look at the the RTYs, look at the IWMs. And this will really help you in many facets in trading and being able to be on the right side of the market and give you the ability to really move in such a way that will give you the best opportunity for yourself, right? It's very quiet here today. I mean, literally after the opening, like by 10 o'clock, 10:30, it was boom, dead, right? So what we really want to understand and what we want to be able to do is when you're trading futures, use paper. If you're a beginner, you start with paper trading, and then from paper trading, you then go into micros, and from micros, you can take advantage of the opportunities on the bigger contract, right? What you want to see is just be consistent, right? Be consistent. Whether you're trading, I don't believe in doing single lot entries, meaning you just buy one S&P here, and then you have to learn how to scale and build into a position. I think that's very, very important. Okay, that's very, very important. And so, and what you want to be able to do, right, is when you trade the market, you want to have the opportunity to, people say to me, well, what do you like? I love the S&Ps. I'm not really a NASDAQ guy, but even though the NASDAQ has been on fire, obviously the market as well, but you don't really want to be able to be in a situation, okay, that you get yourself so caught up in trading two indexes at the same time. That to me really doesn't fly. Why do that? Why overexpose yourself? That's what I would say, right? Why overexpose yourself? It's also really important when you're trading the market to really resonate with the style, whether you're trading in front of your screens all day long, but even take the software. You could trade the Tokyo session at night, right? You can contact me at 914-500-7484, or you could trade the European session. Obviously, during the Tokyo and or European session, there are not you do not use the underlying ETFs for that. Okay, you do not use the underlying ETFs for that at all. Okay, what you want to be able to do is to understand when that you're going to be able to be as consistent as possible by using these multiple time frames and then being able to wait patiently for the patterns to set up. It really will help you, and it really will help change your life. Okay, and I'm just telling you, I've been doing this for quite some time, and I just want you to understand that it really does resonate with all of us as far as in trading the markets and being able, okay, and being able to really be able to just be as consistent as possible. Okay, just to be as consistent as possible, and that's the name of the game. Really, that's just the name of the game. Okay, just to be as consistent as possible. That's all you really want to do here. Okay, what else here? Let's see. It's important that you ask questions, that you learn, and that you focus on. And I can show you how these patterns repeat themselves each and every day over and over. But what's important is that you hit your goal, right? You hit your goal, whether it's $50 or $100 a day trading micros, and then you can bump it up as time goes by. And my goal was to make $100 a day when I first started, and I stopped after I made it. And then after 1 week, I bumped it up to 200, then 300, then 400, then 500, and et cetera, et cetera, et cetera. So I was really able, to be as consistent as possible. But more so, I was more disciplined than anyone. I was so disciplined, I can't even tell you how disciplined I truly, truly was in regard to trading. Because for me, I did not want to work I wanted to make my money, stop, learn, watch, listen, okay, and follow the markets in such a way that gave me the opportunity to be really, really successful. Okay. Now, a lot of you would say to me, well, $100 is great, but in the end, what's this, but can we make more? Of course you can make more. You can size things up, okay? And not just size things up, but you can also be able to look at something in a way that you're able to just trade effectively. If you bought 5 micros, that's $25 a handle, and the S&Ps just ran on that pattern from '06 to '09. That's $75, right? Less fees. You're probably looking at maybe $60, right? You do that now. My research has shown me that these patterns repeat themselves. Well, the patterns I look at are anywhere from, I would say, on the S&Ps on the continued 4 to 12, 4 to 16 patterns a day. Now that's pretty damn good, right? That's pretty damn good, okay? Because of the continuous contract and because you're getting the data from overnight, 23 hours. But again, what's important, okay? What's really important is that when you're trading the market, you want to be able to be as consistent as possible. And that's all really, that's the name of the game. That's really the name of the game. Okay. And if you can do that, and if you can achieve that, it would be phenomenal for all of you to be able to just every single day take money out of the market. There's no greater feeling. I'm telling you, I've been doing this now for over 41 years. 41 years I'm doing this. Okay. So with that, if anybody, look, my legacy depends on people's success. I'm so happy to be here every Tuesday and Thursday from 1:30 to 2. And it just gives me such great joy. And when I hear people who are just telling me how they're doing and how successful they've become and how they're learning and how they're able to just really understand futures. I was talking to somebody, a marketing person. They said, somebody said to me, Steve, people always say, learning futures is very difficult, and they're really hesitant to do that. Now, my answer is, well, why? Number one, if I told you trade water, would that make a difference? Okay, and it really, to me, it really is about one thing, right? And that is to be able, okay, to want to be in a situation that will give you the best ability, having the technology, having a mentor, right? Trading futures is no different than trading a stock, okay? Yes, it's a different system, like Tradier has the ladder system where you click and put your orders in, but there's nothing greater, okay? Nothing greater than you having to learn something new, right? There's benefits in tax structure in trading futures than trading stocks and options. I think it's more doable for people. You don't have to worry about the PDT rule for trading stocks. Trading futures has an unbelievable advantage, and that's why it's my favorite asset by far. Second would be trading equities, because I've done that for so long, and it doesn't really make a difference if I'm trading a stock or a future. As long as I have the technology in front of me, I know my patterns. I teach this each and every day through my live stream. And you know what? It really gives me such great joy. And when I'm able to help so many people from around the world in understanding how to trade using the markets, using my software, and being able to ask questions, to learn. And yes, it's difficult to sit in front of screens all day long, but This is what we do, and we have the ability to do this. And more so, it's just really it's such a really great thing that I love each and every day. I wake up, I don't read the newspaper, I don't watch TV, I don't get involved with any nonsense. But the thing that I look to do, I just can't wait to meet people who want to trade the market and want to be able to learn from me and be able to be in a situation that that you'll be able to help better your life each and every day. Okay. Does anybody have any questions here at all? It's really important to fully understand that when you're you really need to learn. Okay. And when you're learning the markets in such a way, you want to be able to really comprehend the overall scope and understand how markets work. And I'm here to help you. I'm here to answer your questions, but more so, I want to help you help you change your life, be confident in trading, confidence, discipline, consistency, discipline, confidence, patience, and passion are my 5 key words. Okay. And more so, what's important is that when you're trading the markets, you want to be able, okay, to understand the importance, okay, the importance of being consistent. And when you're consistent, you watch, you stop, and then guess what? Base hits, singles, and doubles. You don't want to be able to be overexposed. You have to put stop orders in and keep raising your stops along the way. Trading futures is something that, again, gives me great joy. And at this stage of my life, at 61 and almost 62 years old, gives me a lot of great joy in being able to help each and every one of you. So have a great weekend. Have a great day trading tomorrow. Understand the market conditions. They're slow. But remember one thing. Learn about the environment. See how the markets are. And be able, if you want, to contact me at any time. You can call me or text me and reach out to me. I would love to teach you and help you with any problems you have in futures, or even if you're a beginner, come. I will help you, each and every one of you. Okay. I talk to people all around the world after 4 o'clock each and every day. So have a great day. Have a great weekend. I'll see you here, Back to the Futures, next Tuesday at 1:30. Have a great weekend, and God bless you all.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.